Let me start with a crazy question. What if the next market crash is actually the best opportunity of your life? Most people panic when markets crash. They sell everything, they hide their money, they watch the news and feel terrified. But millionaires, they do the exact opposite. They get excited because every major crash in history has created massive wealth for the people who knew what to do. Today, I'm going to show you one simple idea that can turn a market crash into a life-changing opportunity. And trust me, this idea is much simpler than you think. First, let's understand something important. A market crash does not mean the world is ending. It simply means prices fall fast. Companies that were worth $100 suddenly drop to $60 or even $40. But here's the interesting part. The companies themselves don't disappear. The same business, the same customers, the same products. Only the price changes. And that's where the opportunity lives. Think about it like a massive discount sale. Imagine your favorite phone normally costs $1,000, but one day the store says everything is 70% off today only. Would you panic? No, you would probably run to the store because you know the phone is still worth the same. You're just paying less. That's exactly what happens during a market crash. Great companies suddenly become cheap. But here is where most people make a huge mistake. They try to predict the crash. They wait for the perfect moment, they watch the news, they listen to predictions, and they end up doing nothing. Meanwhile, smart investors follow one simple strategy. They buy quality assets when fear is highest. That's it. That's the whole idea. Let me explain why this works so well. During a crash, emotions take over. Fear spreads everywhere. Investors start selling not because companies are bad, but because they are scared. Prices fall far below the real value. And if you are calm during that moment, you can buy assets that will likely recover over time. Look at history. Every major crash eventually recovered. The dot-com crash, the financial crisis, the pandemic crash. Each time the market fell hard. Each time people said, this time it's different. And each time the market eventually came back stronger. The investors who bought during fear made the biggest returns. Now, let's talk about how normal people can actually do this, because you don't need millions to start. Step 1. Build a crash fund. Think of this as your opportunity money. Instead of investing everything immediately, keep some cash ready. When markets drop, you use that cash to start buying. Step 2. Focus on strong companies. During crashes, weak companies can disappear, but strong businesses survive. Look for companies that have strong revenue, global brands, long history, solid profits. These are the businesses that usually recover after crashes. Step 3. Buy slowly, not all at once. No one can perfectly time the bottom. Even professionals fail at this. Instead, invest gradually. When the market drops 10%, buy a little. If it drops 20%, buy more. If it drops 30%, buy even more. This strategy reduces risk and keeps emotions under control. Step 4. Think long-term. This is where most people fail. They buy during a crash, then panic when prices move again. But wealth from crashes usually appears years later. The investors who became millionaires during past crashes were the ones who held their investments. Patience is the real secret. Let me give you a simple example. Imagine you invest $10,000 during a major crash. If the market eventually doubles, that becomes $20,000. Now, imagine you do this during multiple crashes across your life. The compounding effect becomes powerful. Over decades, those opportunities can turn into hundreds of thousands or even millions. But there is one more important mindset shift. You must stop seeing crashes as disasters. Instead, start seeing them as rare opportunities. Think about it. Markets spend most of their time going up slowly, but crashes happen fast, and those short moments create the biggest buying opportunities. The people who build real wealth are not the ones who panic. They're the ones who stay calm when everyone else is afraid. They prepare before the crash happens. They keep cash ready. They understand that fear in the market creates opportunity. So remember this one idea. Market crashes are discount seasons for investors. When prices fall and fear spreads, that is when long-term wealth is quietly built. Not by gambling, not by guessing, but by buying strong assets at lower prices and holding them patiently. The next time the market crashes, instead of asking, "Should I panic?" ask yourself a different question. Is this the opportunity I've been waiting for? Because for smart investors, a crash is not the end. It's the beginning of the biggest opportunities. If you found this helpful and want to learn more simple strategies about money, investing, and building wealth,
don't forget to subscribe to my channel, like this video, and share it with your friends. Make sure to turn on the bell icon so you never miss any of my new videos.